Good morning. This is Vance Williams out of Seattle, Washington area here in the United States. Welcome to my morning Forex trading show. Yesterday I did make an announcement. We're going to be releasing our new training packages in a couple of weeks. And to kick that off, we're going to do something very special. So keep your eye out for that. I think some of you are really going to love it. Today on this show this morning, I'm going to give you an update on fundamentals, big bank trade perspective, and also my read on the current price movement. For those of you wondering, my brother has made an amazing recovery following his 7 hours of heart surgery just last Thursday. He's actually going home today. It's really quite miraculous. So everyone, thank you for your thoughts and prayers. We are truly grateful for them. On the show, I just want to let you know real quick, when you play the show, one of the things that happens is you see this B part of the conversation. Be sure and click on that, and you'll see more of what I'm talking about. So if you want to know when I'm going to do the show and what I'm going to cover, you can follow me on Twitter, and basically you'll know a few minutes before I do the show. That's probably the best way, and I'd program Twitter to give you an SMS if you really see the value in what I'm doing here. Also, you can go to my website right here, forexartofwar.com. If we click on that, some of you are looking for that book. We've had tens of thousands of downloads, 8 things they don't tell Forex traders. It explains why people fail. You also get another book too. And so, do check those out. I may send an email once a week. It's not, like all these others who spam you every day. If you don't find value in it, you just click on subscribe. So now that we've got that out of the way, let me move to a chart. See, let's start this morning. Before I get into information, some of the things I'm going to say this morning could influence inexperienced traders to actually make trades when they're not ready to make trades. So I want to stress that what I do on this show, even if you see me picking the directions and levels 90% of the time, I want you to understand that this show is just for educational purposes. Knowing which way price is likely to go is only one part of Forex trading. You also have to know how to assess and manage risk. And most importantly, everybody from ordinary life needs really good training to execute decisions. And I'm talking about decisions that involve risks that have real consequences. So, so do keep that in mind. In fundamentals today, on my site yesterday evening, and let me just show you that. I don't usually show that, but I want to make sure you guys know about it. Right here, you can see in the evenings I post high impact data. I don't know why I put the selfie on there, but I did. I think that's the first time I've done that. I think I looked up a picture of the central banker in the UK because that was the key data, and for some reason I decided to put my picture instead. Anyway, so as you can see, I was anticipating. You can see I label this. If I put 2 asterisks, that means that you can see here the labels. That means that there's likely to be hypervolatility. It's more likely. If there's 3 asterisks, you'll see that during non-farm data. It's basically means, yeah, it's almost inevitable. So that gives you a little idea. But I publish this, and I often will post some fundamentals as well right above it, just so anything that I learned during the day right before I'm checking out for the evening, I'll put right there. So that's at forexartofwar.com, on that second link. So keep that in mind. But I said that this information on the coming out at 4:30 was probably going to be a market mover. All right. And by the way, just real quick, that's the market moving right there. That's the 4:30 a.m. data, and I'm going to talk about that. So with respect to the UK and that 4:30 a.m. data, this was the MPC meeting minutes. And based upon the information I gathered so far, it looks like the two of the 9 voting members wanted to increase the interest rates. I also noticed that there's clearly, not just from them, but from others, there's an increase in optimistic talk about the UK economy. So really quite the turnaround from just a week or two ago. Now this seems quite staged to me, and my guess is that they've had enough of this dropping. And let me just zoom out for you here. There's been quite a drop here just since the end of October. We're looking at 588 pips. So my sense is that they're kind of done with that drop for now, and they're just talking the pound back up. What do we do with this information? We just roll with it. I mean, we just, you'll see that what they do is part of what we do, but it doesn't really matter what they do. Now, in the Eurozone yesterday, there was a big surprise with the German zoo economic sentiment that came out kind of a stunning 11.5 points. The expectation was for minus 1.1%. So this showed a dramatic increase in investor sentiment. Thanks, Garth and others, for bringing that to my attention yesterday. Most economic indicators out of the United States are positive for a stronger economy. That's in contrast to that data. What does all this mean? My gut feeling is that central banks, governments, and major bank traders are going to coast the rest of 2014. So what this could mean is this could set up a reality check for the new year. The real situation: very strong U.S. economy, pretty much weaker Eurozone, weaker UK, and that could signal that could be preparing us, if we know that, for a big boom for the U.S. dollar coming in January 2015. So something to keep your eye on. I've been, as some of you know, I've been monitoring big bank traders like Morgan Stanley, Credit Suisse, JP Morgan, Danske, and of course many others. Sorry, I've still got a little bit of a cold, so I get a cough once in a while. What I avoid commenting directly by name here on the public show. And I want to stress that while I believe this information is accurate, I have really no way to validate it. So keep that in mind. I think as I was looking at the bank trades this morning, I think what was most noteworthy this morning is one of the most successful banks changed directions at about 11 p.m. last night on the euro dollar. Again, sorry about the cough. They canceled their sell and they bought at about 125.10, which we're about 30 pips above that right now. Now they're targeting the 12900 area. Now this by itself doesn't mean much, but they seem pretty dialed into events that have unfolded in the past 24 hours, especially with what we've seen this morning. But what I mainly see, and what I mean by that is I've seen the central bankers starting to talk up the EU and UK outlook. So they seem to be right on the money. So we'll watch. The main thing is, like I put out in the headline today, are bankers changing directions? It looks to me like the leading bank has changed directions on the euro dollar, and it looks to me like both the outlook for the UK and the Eurozone have been talked up positive. So this is pointing to a move up, and that brings me to price movement. I want you to also notice here, this is a Euro 30-minute chart. I want you to notice all of the noise. Well, basically buying interest. The sellers would have to run into at this level and this level and this level. I mean, there's a lot of things to run into down here before you get below that 2400 number. Sorry, I had to cough again. And then the ultimate low at 2364. You can see since just before London Open yesterday, you can see this trend channel right here. It's basically just showing, let me show you the range. The range is about 27 pips. It's been a rising range. So what that shows you is over the last 24 hours, it shows you that the buyers are a little bit stronger than the sellers. Now with the data that we've been seeing coming out of the UK, with positive investment information coming out of the United States, we're probably likely to see a move up. Let me see, 24 pips to that important level right there. Let's zoom out, see what you see there is that's just, there's been sell orders sitting in that area. Now, it's very important to keep in mind that these sell orders and these sell orders were long-term driven by, I'm sorry for my messy chart, long-term driven by the fundamentals. So long-term, which we really call medium-term trades, which are based on a 6 to 18-month outlook. I think this is what most of the banks are using. They're driven by fundamentals. And we need to understand that these levels may not matter right now because the fundamentals may be changing right now. In other words, what the central banks are talking about. Now, this is just the first couple of days, so don't hit the buy button, if you're new to this and don't know what you're doing. But I think the medium-term trade, at least for now, is pointing at more of a correction coming into the Thanksgiving and Christmas holidays. But that's what we see based upon the last couple of days. There may be room to get in a trade if price stretches up here. I guess I'm kind of zoomed out a little bit too far. There may be room to get in a trade before you run into some sell orders right here. I mean, not everybody has the read that I do, so there's still going to be some sell orders sitting here. But if there's strong buying interest, it could blow right through it. But do look for some sell orders in this 25.67 area, and that kind of gives me an opportunity to talk about risk. When you know there's going to be some sell orders in an area, and prices coming into it, you've got more risk, right? Because there's more opposition. You need to get a better price. Okay, so moving over to the pound, of course, as the MPC meeting minutes were released out of the UK at 4:30 a.m., we see that dramatic turn. I don't think it was that hawkish in terms of what they said. I mean, fundamentally, if you look at what they didn't do anything, and two people thought they should do something out of the 9. Nonetheless, the overall conversation caused these pound speculators who have an appetite for bullish nature to go ahead and run with it. And also, this could be due also to the perception that we're gonna have a slowdown coming into the end of the year here. So that's the way the story is shaping up right now. This is quite a bit of movement to trade. I believe it's around 70, or last time I looked, it was 70. Okay, we're up to 100 pips now, and you see how it just kind of ignored this level. The reason why is because, and you got to understand risk and buyer and seller behavior. The reason why I mean, there was some selling here, but not very much. And the reason why is because the story that held price here is different than the story that's happening now. And that's part of what affects your probabilities. And you just have to know how to read, assess that risk and manage it. Right now, we're getting it, the money's turned over to the top side. It's doing it right now. So there's potentially a trade setup right in here. Okay, so for the euro, you just have to watch and see if you get a nice move without a 38.2 or more pullback right in here, or the area to really watch is when it gets above 25.67. That's going to be pretty key. Let me take just a real quick look at the Australian dollar. We dropped down to a 5-minute. So I don't trade 5-minute charts. Just, there's so much confusion out there in Forex trading. I need to see the behavior. I need to see, did this make a clear price move, pull back to 38.2 and push again? It could be argued that it did. See, it pulls back and pushes again. Whenever you have one long reversal bar, you can't use that as an optimal target. It's showing that in this area, there are more buy orders than sell orders. And so you end up, if you see this price logic, you can see that the real area is right here. And so that's where it pulls back and hits again. I hope you caught that, because that's just my price logic techniques. That you don't need candle patterns or chart patterns. You just need to know the behavior of the buyers and sellers. And if you look at this, there's more buyers here than there are sellers. You've got a small candle down and a big candle up. And so the resolution ends up being right in here. So that's all in other words, that's all the confidence the sellers had was right here because they knew these other buy orders were here, and then they started pulling them off, and up we went. That doesn't mean it won't go down again. It just means that the behavior we look for to give us an edge is already played out. Going over to the Kiwi, it's been in a steady trend down. Let's zoom out a little bit. All right, so hit a pretty strong double top here. It's been reversing right into this level where it's picking up some buy orders. Basically, I would look for this to advance down below here again before considering any trade. You can see that there's buy orders in this area, so manage your risk accordingly. Again, I want to stress that if you're taking medium-term trades, like you're going for 75 to 150, 200 pips, you're trading medium-term trading. Remember that those trades are driven by fundamentals, and you really need to know what that fundamental story is to trade. And it looks right now, at least the last couple of days, it looks like that story is changing. I want to remind you guys again that you can get my free books at forexartofwar.com. Let me just pop over there. That's on that link on Join the Conversation, but it's right here. And also, if you ever have a question and you want to write to me, you can. I'm happy to always answer questions. And also keep in mind, we have something pretty spectacular coming out for our training program release, three packages that is designed to not only it's really designed to fit people's budgets, but the training is phenomenal, and the special offer we're going to make, I think you're going to love. So with that, members, I will see you in our live trading room at 9:30 a.m. Eastern time. And everyone else, just have a great one, and I wish you the best in your trading. Cheers.